Trader.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Monday morning. Welcome back to the frivolity. Oh, the sky's falling. No, it isn't. Yes, it is. No, it isn't. Yes, it is. Back and forth, up and down like, you know what? You all, hopefully, longtime viewers could fill that line in. Anyway, happy Monday morning. Here we are about halfway through the merry month of May 15th. Actually, we have big options expiry, the monthly options expiry, coming up here on the 19th. And in fact, actually, I don't have it on here. But if I pop on over to our charts page, I have the S&P 500, and just to give you a visual reference, the difference, we in previous weeks we've been talking about, 20,000, 30,000, 50,000. Here you can see the heaviest open interest in the puts for this coming strike, the 400 strike, big fat round number. Look at that, 147,000 contracts. Holy free holies. Just to try and, put that into perspective for you and I, Joe Schlub, what's the average right price of this option? At some point, this option was $25. Holy moly. You can see it really ramped up in open interest up to its peak right around here. Let's call it, I don't know, probably even all the way through here. So that's about $4 up to, let's as low as $1. I don't know if we said the average right price was maybe $2. We're starting to talk some serious money here. Where is my calculator? It's so big, I need a calculator to show you. So let's just assume $2, right? So $2 is your average right price times 147,000 contracts times the multiplier, which is 100. So that comes out to a grand total of $29 million in option premiums up for grabs just on that one strike price alone. And then if the market happens to close below 400 there, then that means, so you ready for this? This will blow your mind. 147,000 times 100 times, and we said the strike price was $400 on the SPY. If the market closes a nickel below that 400, then Wall Street's on the hook for $5.88 billion. Woo-wee! That's some money. So there's a lot of option premium on the line, probably like 30 million bucks. If Wall Street could just pocket that, I think they would be more than happy. If, however, they do take the market out below that 400 level, then Wall Street's got a bit of a problem. I mean, $4 billion. Does anybody have $4 billion just lying around they can lend me till next Tuesday? I promise I'm good for it. Anyway, so there is the image, and it's interesting. There is that 400 strike. And also, too, I'm a big fan of these particular moving averages. Notice how 30 SMA just so happens to be right at that 400 level. My hunch is they're not going to let this market go up below there. That's my hunch. So, the question of late had been, why did we see the market actually even pulling back like this? You can see these big tails. And I think that the big sort of driver, of course, you'd have to have your head buried in the sand not to be aware of this, is this whole debt ceiling debate issue. I don't know whether this is actually settled. If I understand correctly, Granny over there in the U.S. Treasury, she is sort of balking about how, middle of June, we're going to run out of money, blah, 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 blah. I mean, I suppose you could technically argue that the actual fiscal year end is in September for the United States. And I've actually suggested to people that I think what's going to happen here is they are going to let the market go into default, but it's going to be one of these sort of technical default, not really default kind of things. And actually, back in 1979, I was quite surprised, but somebody on the site, and it's just such an excellent testament to sort of our lounge and 1+1=3. We're all working together to try and figure all this out. They went and found technically the United States did default on its debt back in 1979 in a very similar fashion to what you see happening here. But because they got their, their skirt together by time fiscal year end rolled around, they made up for all the arrears and interest payments and stuff. By fiscal year end, you never hear about it later on, and it's just a footnote that actually technically the United States was not in default. So I have a funny feeling you're going to see somewhat the same kind of thing through this summer. That wouldn't surprise me at all. So it will be interesting, but you can see, at the end of last week, they were kind of like, screw it, I'm not meeting with you. No, you're a bastard. I'm not meeting with you. To hell with you and all that. And of course, the risk markets, you saw Bitcoin, stock market, the whole shebang, everything started to come off there. And more, I suppose, more significantly for sort of market message, we actually got quite a violent reversal to the upside in the US dollar index, which is basically like a risk off proxy in the market. So we'll see how this plays out. Right now, as it stands, I think this is a valid Adam and Eve. I suppose in this woke world, maybe this is Steve, maybe this is a house plant. I don't know what the hell you want to call it. Point of the matter here is this does look like it has bottomed. I think the US dollar weakness, the overt weakness itself is probably done. It is interesting how this whole bull market happened to, the correction just so happened to be just a very natural, normal 50% retracement of this entire bull. I mean, what a surprise. And I think WD Gann's laughing at us in his grave right now. And interesting enough, if we go the other direction, 50% rules are going to do nothing more than take us back up into bifurcation levels and tests of sort of these medium-term down trend lines. As well too, and I don't know how long this takes to play out. This might take out, I've been showing you those Richard Wyckoff 2023 bottom cycles. I get the feeling that we actually in the US dollar would probably be the other way around. I think actually this thing, if it's going to top, it will top into this September, October window. So who knows how this goes through the spring and summer, but I think it's probably going to look something like that. So anyway, we'll see how that goes. I think just the bottom line here is that the US dollar index has turned. And of course, in June, and I think that must be what this is. Actually, this is a reference to July. And actually, this makes a lot of sense too, because normally, like stock markets, probably Bitcoin, cryptocurrencies for that matter, they like to trough somewhere around the last week of June. So I would actually expect probably, it might be muted. It might only be a rally into that level, 2.618, a test of these previous highs. And you might even find that this creates some big honking head and shoulders pattern heading into the fall. I could very easily see something along those lines. So we are in the seasonal period of risk off, sell in May and walk away, blah, blah, blah. I'm still sitting on the fence about whether the stock market, things like Bitcoin, have actually broken yet. There is the Bitcoin chart. It does have a weekly M top, right? If we change this to like a line chart, you can see there is a very well-defined M working there now. And as I pointed out through the broiler chicken show and stuff, we just banged into a ton of support here and the market just bounced right off of it. So, yes. And, for whatever it's worth, we were hunting short setups, 3-step setup on Bitcoin, and the market, of course, absolutely puked out and dumped on some really weird, Canadian news about Binance and all that. There really wasn't any other sort of FUD to drive the move. And literally, as soon as the market closed on Friday, boom, the market just jumped right back up here. And today, not a heck of a lot of econs, and not really, if anything, almost kind of conciliatory news. If anything, that should actually cause the US dollar to maybe back off here a little bit. As people hold out, well, maybe these government people will get together and they'll solve the US debt ceiling issue, and this will be a non-event in the market. It is interesting to see how our breadth indicator here, I mean, first and foremost, you can see that actually the market's getting a bit oversold now. Remember, we saw this on crypto about a month or so ago. Went long on a bullish crossover on crypto, and crypto's just kind of floundered here while sort of waiting for the broader market to finish its correction. I like to talk to you guys about following the country funds. This is sort of like world equity, minus 70 on the medium term, minus 40 on the short term. Not really oversold yet. And then if we pop on over to the S&P 500, minus 36, minus 36. So, we're not even remotely oversold on the stock market yet. And you can see sitting at 30s and change on the ES. Now, when I see that image, though, if you get any kind of positive news out of Biden and those congressional people tomorrow, you might see this thing pop up smartly here. Interestingly enough, in a kind of an odd way, we'll see how this plays out. I mean, I think it's still relatively early. But in an odd way, we might have a situation where bad news for Main Street might actually be good news for Wall Street. So what do I mean by that? As you can see, Monday, May 15th, Econs today, very, very light. It's a Monday, so I mean, you should take Mondays very lightly anyway. And the headlines are New York manufacturing activity shrinks more than expected. You notice that this doesn't even get like a red box, this New York state manufacturing. It gets like 2 stars, but it doesn't get the big 3-star rating. But nonetheless, I think what's going to happen here is that this is going to be like Main Street not feeling so good. But in a weird sort of way, Wall Street will kind of like that because maybe the Fed's done raising interest rates, right? And we're finally finished with that rate hiking cycle. Interestingly enough, when you actually look at this econ itself, it's pretty ugly. It is gyrating quite a bit here. We were, recently back above 0, and we tried to put in a W, but boom, that got bitch slapped. I don't know whether we've actually broken through this low. Let's see, can we see that? I guess that's minus 32.9. So we haven't quite broken through that. I suppose you could argue if we get a half decent print here next month above 10.8, that is still technically a W. But New York State and that sort of region still very much floundering. And on balance, with the raise in interest rates, it doesn't surprise me. What surprises me is how this Canadian market is just so bloody strong. And the interesting thing here is that the bank people in Canada, they have not been keeping pace with the United States of America. So what that tells me is that, and the headlines are that the house prices in Canada are right back up at old highs. The banksters in Canada don't give a fuck about the inflationary pressures here in Canada. And you think you just saw high prices at talking to all our Canadian audience? I don't think we're done yet. They're just massively hyperinflating this economy here in this country. And the house prices are heading right back up to the old highs. And as you can see, this housing starts number came out this morning. That's a 40,000 jump. That's like, isn't that like about 20% increase? 15, 20% increase. What the hell are they doing? So, and in a weird sort of way, they still say they're blaming, well, house prices are going up because there's a shortage of housing. And of course, they've just opened the doors to immigration to Canada, and we're bringing in people from all over the world. And of course, there's no way immigrants can afford to buy, retail price $1 million for a house. I think like the average house price in Canada right now is something like $700,000. I mean, this is insanity. And so that means that basically all of these people that are coming into Canada, they're all getting loaded up to the tits in debt right out of the gate. If you want to buy a house here in Canada, unless technically you basically have to be a millionaire, especially if you want to live anywhere near the two major cities of this country, Toronto and Vancouver, house prices well in excess of $1 million. So go figure. Tad bit irresponsible in my opinion, but who gives a fuck? The banksters are running the show here. They're long all this equity. And of course, they don't want to be caught holding the bag with falling house prices. They want to make sure that all of these houses, all this development and stuff is sold into the public. And then I suppose once the public is fully loaded up, then they'll break the market. And in a weird sort of way, that's actually what kind of happened in the 1980s, where the oil price actually broke in about 1985, 86, somewhere in that area. And it was that catalyst that started to break the back of the Canadian bull. And it really, through the rest of that commodity weakness cycle, Canada didn't do so hot. Anyway, we'll see how it goes. Only time will tell. They always say markets can remain illogical far longer than any of us can remain solvent. So anyway, so interesting dichotomy between, I don't know whether that's the right word, opposition between the US economy and the Canadian economy. It's fascinating the differences between these two. Having said that, not really market moving information, and the irony of it all, I think I pointed out in yesterday's broiler chicken show, Canadian economy represents about 4% of the world's equity market. So it's not really that big of a deal. The only thing is I'm here in Canada. So we do have a few Canadians on the site. So it's obviously earth shattering to us. But to the rest of the world, I even joked with Chris before you even knew me, did you ever interact with anybody from Canada? He's like, I didn't even know where Canada was on a map, which I don't blame him, because that's probably, 80-90% of the world is exactly the same. So anyway, Econs, not really much to chew on, although pretty nasty number out of New York State. And actually, interestingly enough, I've been seeing some really cool articles. You can buy like really, really nice places in like an hour's drive south of Pittsburgh. So that's Pennsylvania, right across the border in West Virginia, for like literally they're giving the places away because nobody wants to live in West Virginia. But an hour's drive south of Pittsburgh, that's not terrible. Anyway, you ever saw Groundhog Day? That's that kind of world, right? Punxsutawney Phil and all that. Anyway, so Econ's kind of light. News, as I said, I think probably the biggest sort of market moving news is this idea that, all right, the White House and the Republican driven Congress are going to try and get together tomorrow. So I wouldn't be surprised if you see fireworks. Tomorrow is probably the day that you're going to see fireworks. Other news that caught my attention today, I mean, it was a little bit depressing, kind of sad. China is sentencing a 78-year-old US citizen to life in prison for spying. I mean, have you no conscience? I mean, that's ridiculous. So China continuing to be a totalitarian dictatorship, and really just stupid stuff, I mean, just dumb. Is interesting that the news headlines that I'm reading, a lot of talk about, things turning more sort of totalitarianism, dictatorshipism and stuff. and almost kind of like a resurgence of fascism in the world, which is fascinating. I was rather shocked. I read today, and very bizarre, almost in like you have to think, man, this has got to be intentional. Somebody actually went on an Austrian train, and hijacked the loudspeaker system and jammed through a speech by Adolf Hitler that played on the train as people were, I don't know whether they were commuting to work or something along those lines. It was like, wow, now that you can't write better fiction than reality. I had no idea why on earth something like that would happen. But anyway, so I don't see it here, but earlier I was reading. There seems to be a real resurgence of fascism in the world. Interesting how it'll play out, but on balance, it's almost like, geez, it's the same shit over and over and over. So I don't really see anything really dramatic news-wise. I suppose news. Allen, in a very, I think, probably very politically correct move, went and hired a female CEO for his company now, and the tweets and the memes and stuff where basically she was just strap a wig on Allen's head, and now you have a female. We'll see how that plays out. Who knows? But it is interesting how they're kind of saying, is she being set up to fail here? And I don't know. It wouldn't surprise me if Deep State kind of has the guns out to undermine Allen and his Twitter project. Who knows? We'll see. Only time will tell. So I don't know. I didn't really see it. Like I was a little disappointed to see news about China and their silliness over there. Interesting also too. Now that I fear for TRI people in this country. I won't name names, but you can see where my mouse is. A little bit surprising. You might actually see some fireworks out of Southeast Asian countries now that the population is trying to stand up to their totalitarian dictatorships. And we'll see how that goes. Other than that, I didn't really see anything much news-wise that really caught my attention. So kind of a light news day, other than, like I said, I think everybody in the market's waiting for this tomorrow. A little bit of a pause in this breakout in the US dollar, probably a little bit of a reprieve for the euro, catching a bit of a bid. You can see the commodity currencies, they're all rallying back from Friday's drubbing. Crude oil moved up nicely here this morning. Didn't really have a textbook trade in crude this morning, but I am following these opening range trade setups. This wasn't a valid one because it happened inside yesterday's range, but I wanted to just follow it and see how it played out. So actually I missed Chris this morning, so I just did this on my own. But there was the first minute of trading. I was told to go long. In fact, this happened so quickly that I just had to work my order. And if it had gone up to this line, move stop to scratch, I would have just missed the trade, but you can see it didn't. It was getting very, very close to getting stopped out, and it's just the way it goes, but it turned around. Let one contract go at 2-1, just basically following the plan. It was really interesting how basically we came up right to this 2.618 chaos level and then just stopped on a dime there. Then it worked its way. So let one go at 2-1. Then it worked its way back to scratch level, right? Move stop to scratch as of this point. So scratch level was here, coming this where we entered the position. And that was it for the opening range trade. Not bad. It was a fun experiment. Just keep mining the data. I actually had a really interesting trade location here this morning. This is a concept that we teach in our level 2 program. And I used to work with a guy in Chicago who all he did was trade POCs. So here's a really good example. This is the overnight session, all 24-hour session, but you can see these big red lines are previous, what they call points of control, or where basically the most volume traded on any given session. And Chris, he used to actually a different Chris, this Chris from the CME. He used to just literally point these out, and as soon as the market would come in and tag them, boom, short that level. So for fun, I did that this morning in the day trader room with the kids. We were also at a 4669 and a 2.618. And then as soon as the market dumped, I just pulled it off here, getting ready for the video today. So that was kind of a fun little demonstration for them this morning. But again, I mean, I'm kind of almost thinking that this is a non-event day. The crude oil, of course, took a huge haircut last week. Well, I suppose the 4-hour chart's probably the best place to show you. So we have this big market structure failure, lower highs and lower lows. You all know what happened with Bitcoin and all that. Everything just sort of dumped into the weekend. It's interesting how we still have not hit this 2.618 year. And this is a V bottom by definition. So I wonder whether all we're doing is just a dead cat bounce into resistance. And based on my sort of 4-hour levels, I'm still very interested in hunting shorts at this level. You can see we're into Brian's favorite fibs. This was the gap. Actually, that was the POC reference, beg your pardon. I think on lower time frame chart, there was a nice gap in this area as well. 30 SMA will probably work its way down into here, and this probably sets up some sort of trade tomorrow. Definitely like that idea for a trade location. In here, I mean, we got up into that POC, and it was a fun demo trade for all the kids. There was a couple guys in the day trader room there this morning. Actually, there was one gentleman in the day trader room this morning. He did this trade. I didn't, he lives over in the UK, and it was great to see him back on the site again. Keep in mind, everybody, we're all going through our sort of personal journeys. And sometimes where the market gets the best of us, and unfortunately he had a little bit of a blow up there last year, and I mean it happens to all of us. So it was great to see him back in the day trader room. He sort of got his head back on straight, and he's back in, and he was actually hunting this level through the London session last night. This is in the stock market, and actually interesting if you note that gap level. And also too, we can do things like fibs. So notice that this was a nice reload zone. So it's going to be an interesting trade location. So if we think about that, let's just sync all these on all the charts so you can see this. If we drill down to the lower time frame chart, this was his setup right up here, and I looked at this after the fact and went, that's actually pretty solid. So there is that fib. There is the reload zone that I try to teach you guys in the level 1 program. LaMarcus, if you are watching this is exactly what I tried to teach you in the level 1 program for trade location. I know he's had lots of questions about reload zones, but hopefully you can see that. Brian's favorite fib, 78.6. There is that gap reference level. So this is an interesting level as it is. So then the whole point of this is they drill down to the lower time frames, and notice as we are rallying into that level, if I just put these other indicators away, hopefully you can see as we rallied into that level and into the reload zones, here comes the bear divs in momentum. So up top here, not a bad place to hunt trade location. And this was super cool. Dave was telling me that, he was watching the bear divs develop. As of here, of course, you can see big fat M in price. Let the market break. Of course, all the bear divs, we have trade location. Now we have market structure. And he just simply waited for 78.6 level. And he hit that rally right there. Damn, that's pretty freaking cool, eh? And look at his trade. Woohoo! So if anything, I love this. This is like reload zones within reload zones. And also too, you can make the argument, big smile right here. I often suggest to you guys, this came in after the fact, but you have to kind of see it. Well, actually, during the fact, that's that little guy right there. So there's the original M that sort of framed the top. But then you could argue this is a big honking M. So once we break through that level, oh boy, look out. All right, thank you, Chris. Well, you can also see there's a cute little M right there. So remember, we had trade location. This was a big fat gap right there, reload zone. So you get it, drill down to lower time frame. Once we're in there, we had confirmed bearish momentum divergence pushing up here. And then hopefully you can see how the trade developed. Oh, I was pretty darn impressed. The only issue with this, and this happens a lot, is that this trade, and especially his actual trade level, happened at like 4 o'clock my time. So there's no way I could participate in this. I suppose somebody that was on the East Coast of North America could participate in this. And of course, Dave's over there in Europe. So this was basically right in his wheelhouse, an absolutely perfect trade. And, as I'm waking up and getting ready for my trading day, hunting opening ranges and crude and all that kind of stuff, and the market dumps here and he's telling me, all right, ding, 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 hit my profit target. I'm done. See you later. Have a great day. So way to go, Dave. Beautiful trading. Absolutely textbook. Take a screenshot of that. That's exactly what you're supposed, especially anybody who's in the level 1 program kind of idea. You're here at TRI to churn and learn how to trade. I mean, I got to tell you, that's it right there in a nutshell. So really, that would be a really good short. I don't know that you can put that together, but beautiful trade by a site member today in the futures markets through the European session. Just great trading, Dave. Let's see what else. I suppose we'll finish off just a quick boo of the old corn. We had said yesterday, through the broiler chicken show that we got a message. This was late Friday, early Saturday. As soon as this bull div came in here, boobity boo and boobity shmoo right there, that if you were a bear, you better cool your jets. And frankly speaking, I think that was probably sage wisdom. Market's just been grinding its way higher here. It was interesting this morning, though, that on this dump, and it's not really much of a dump, but you'll notice that momentum actually petered out and confirmed a bearish breakdown. So I'd make the argument off of this is like a lower time frame chart, but I'd make the argument that now the bulls, you better cool your jets. And frankly speaking, it makes sense. You can see A, B, C, D. We're in reload zones. You should all know what the heck this is. Brian's favorite fib, sitting up there at 78.6. And this, of course, if you were hunting a bot setup and you could sneak your way in here, this would be a profit-taking objective up here, this A, B, C, D. And keep in mind, A, B equals C, Ds are actually technically, this is up here, what's known as a PRZ. And of course, that stands for potential reversal zone. So the fact that we're getting messages from momentum that, hey, maybe if you're a bull, maybe now buying is not such a good idea. Again, also too, to reiterate, I think the market's kind of going through dead cat bouncy kind of action. As there really isn't any major news that came out today. There's not really any major econs. If anything, you might have, like I said earlier, what's bad for Main Street actually turns out to be good for Wall Street. And we have trade location. We have indicator confirmation now. Willie did actually technically get stupid. The only thing that's missing now to actually justify taking a trade here is market structure. And I don't know how long this is going to take. Mate, you can see they just ran the stops there. So this is why once the divergence, which is confirmed, and that happened right there, now you can actually start hunting for market structure. You really should wait for that div to actually confirm. So div confirms can now hunt for market structure, and quite literally, we're looking for an M to actually justify shorting. We are in short trade location. We are coming up to Brian's favorite fib. We are coming into a harmonic objective, PRZ, potential reversal zone. I mean, does it look like this? Hell, it might look like this. You don't know. So just the point is that at least now that we have the divs in place, we have trade location, we have messages, bulls, you better cool your jets. If we get any kind of bearish market structure come in anywhere up top here, I actually think our dead cat bounce counter trend rally is done. And just, put that into context. Really, this is the 4-hour chart. Remember, there's the big market smile. This is A, B, C, D into Friday, into that weird, Canada's Binance is done dump, and we're just dead cat bounce counter trend rallying here. I didn't really know whether we were going to top out off of this level. Now, once we made a new high here, I moved this 45-degree angle up to there. We just made a new high. Maybe we move the 45-degree angle up to here. No idea. I'm not calling tops. All I'm going to simply say is off of this 4-hour chart, you now see that if you're a fan of Colin and the dump chasers, we're actually now into his area that if you did believe this was a bear and you wanted to join the bear party, this is what Colin affectionately likes to call the dump chaser zone. So he's not allowed to short down here. But now that we've counter trend rallied, we're back into basically horizontal support and resistance, right? Off lower time frames. I showed you this is reload zones. If we get any kind of topping pattern here, well, it probably means that not a bad place to think about joining the short party. So let's see what happens with Biden and the politicians tomorrow. I do believe that these higher time frame setups are just working away, and there's really nothing to be done on any of these things. If you did take this Bitcoin short, you move your stop to scratch at about 25 G's. You still have your stop all the way up at highs, and I can't get bullish until I actually see a W on the other side of this trend line. And that's basically where I'm sitting right at the moment. Okay, why don't we leave all the rants at that? Today is Monday, so go slow. Mondays are kind of a funny day. Like if you look at crypto and altcoins and stuff, a lot of coins have actually already dumped right back into things like reload zones. So I actually am seeing people on the site actually starting to come in on the buy side a little bit here. I don't know. I'm a little bit leery about actually getting too bullish. If anything, because this is May, June, I almost want to start seeing W's now and seeing bullish divergences and stuff before I actually start getting bullish. I think at the absolute best, it's probably like a week or so away. Then we rally into FOMC for middle of June. Then we have one more dump into the end of June, beginning of July. So that's sort of what my forecast is. Okay, have yourselves a great day. PMA for the win. Slow and steady wins the race. Let's see how these politicians act tomorrow. Don't take no wooden nickels. Remember what your number one job is. All the best. And the only thing everybody say is bye for now.